โยบายภาษีศุลกากรที่ประธานาธิบดีสหรัฐประกาศล่าสุดอาจจะส่งผลกระทบต่ออุตสาหกรรมและพอร์ตการลงทุนวันนี้ผู้จัดการกองทุนมองเห็นความเสี่ยงและโอกาสอะไรจากความผันผวนในครั้งนี้มาฟังกันค่ะ
The last year has been an extremely challenging period for the healthcare sector, which has significantly underperformed broader equity markets. Biopharma stocks in particular have faced extreme regulatory and political pressure, with some drivers including most favored nation drug pricing, proposed tariffs, Inflation Reduction Act, drug negotiations, and of course some controversial political appointments. In addition, in the first part of the year, we saw a very volatile broader market backdrop in which we essentially entered very briefly a bear market, and that resulted in a significant rotation within healthcare towards some of the more defensive segments of that. And so with that backdrop, biopharma stocks, the ones that outperformed, tended to be lower beta, more stable, often lower growth companies. Our strategy, by contrast, tends to focus more on the most innovative biopharma stocks. They tend to be smaller, mid-cap companies, and as a result, that segment actually underperformed. Now, concurrently, healthcare services, which traditionally has been the sort of lower volatility ballast within the portfolio, also faced unique challenges. This was exemplified by the extreme share price volatility of United Health Group, a bellwether for the broader managed care industry within healthcare services. And the result was that rather than offsetting the higher volatility in the typically historically higher beta biopharma segment of the market, what we saw instead was that healthcare services added further volatility. And so this resulted in essentially the perfect storm for our approach. Now, looking forwards, we're a lot more optimistic. Why is that? Well, we can start with valuations. Valuations are at extremes relative to history. And so three specific examples. One, price earnings valuations for healthcare subsectors are at 10 to 20-year lows relative to the S&P 500. Two, if we look at the total market capitalization of healthcare as a proportion of the S&P 500, that has dropped to 9.4%. That's the lowest it has been since 1995. By contrast, healthcare contributes 13% to overall earnings within the S&P 500. So there's a big gap between the two when earnings and market cap really should be about the same proportionally within the S&P 500. Now, there have only been two periods in the last 40 years when you've seen a bigger gap than we do now. The first was the global financial crisis, which was of course an extreme environment and one in which other sectors, so non-healthcare sectors, were significantly and unsustainably under-earning relative to history. And then more recently, we've had COVID, which was of course another extreme environment in which healthcare was over-earning relative to history. But these extremes do not persist. So we're optimistic this one will likewise pass quickly. Now, of course, we need more than just cheap valuations. We need catalysts for performance so that would cause those valuations to move back up. And so looking forwards, what are some of the catalysts that we see? Well, first of all, if we just look at the broader market backdrop, a recovery in the healthcare sector would disproportionately benefit our portfolio because, as mentioned earlier, we're biased towards those higher growth, higher beta companies. And actually, that's exactly what we've been seeing in recent months. So looking at Q3 so far, alpha in our strategy has been approaching 4%. So a very strong rebound from where we were. Second area where the outlook is looking better would be areas such as tariffs and agreement with regards to most favored nation drug pricing. On both of those, we expect significant progress as we go through the year. Specifically on tariffs, these are actually likely to be less impactful than the market has been anticipating. Why? Well, because first of all, actually the production of the drugs and the export of those goods, they're actually very low-cost goods. It's the IP, it's the offshored IP that tends to be more expensive within the overall biopharma space. Second of all, if we look at most favored nation drug pricing, that is unlikely to result in wholesale significant changes because you need legislative reforms in order to enact that degree of change. And so what you're more likely to see is the government providing a quid pro quo, providing expedited drug approvals, tax breaks, etc. So rewarding pharma companies for providing improved optics on drug pricing. The third area would be Inflation Reduction Act negotiations. Those are expected to the next round are expected to conclude on the 30th of November. That will provide greater clarity as to the Trump administration approach for the rest of his term, again removing an overhang from the market. The fourth driver is a very obvious one, lower interest rates. This is a significant tailwind for the smaller market cap stocks, which tend to re-rate on the basis of lower rates. It's also a spur for further mergers and acquisitions, which historically have provided very substantial upside for smaller companies in the biopharma space, particularly in the current environment whereby larger cap companies are quite desperate to replenish their drug pipelines with a backdrop of patent expiries. Now, the fifth area, more specific to the portfolio, we're going to be seeing an acceleration of news flow relating to drug pipelines over the course of 2025. And so specifically, if we look at some of the larger industry leaders, companies such as AstraZeneca, Eli Lilly, Merck, all of these companies have a number of clinical trials for which we'll be getting results in coming months that should be very supportive for that drug pipeline and for share prices. And we see a very similar backdrop in the small and mid-cap space as well. And so essentially the innovation story certainly has not gone away in the biopharma space, continues to be immensely strong despite some of the negative headlines that we see as discussed earlier. Within the medtech space, we see similar tailwinds. You have revolutionary new products, in particular in terms of cardiovascular health, being brought to market and brought to an increasingly wide market as you see increased numbers of approvals. So companies such as Edwards and Boston Scientific are leading in this area. And so bringing all of that together, in conclusion, the outlook is significantly improving as we close 2025. And looking into 2026, we see a far better setup in terms of returns for our clients. We're already seeing an improvement in our alpha profile, so we've outperformed by about 4% over the last quarter. And if we add up the backdrop of extreme valuations, or extremely cheap valuations, paired with a number of catalysts, if we see an improvement in market beta, paired with continued improvement in fund alpha, this sets up investors for very strong returns going forwards within healthcare.
แม้ว่านโยบายภาษีของสหรัฐจะมีความไม่แน่นอนสูงแต่ผู้จัดการกองทุนก็มีการคัดเลือกหุ้นที่มีความยืดหยุ่นสูงมีนวัตกรรมและมีความเสี่ยงต่อความมั่นคงทางการเมืองต่ำพร้อมทั้งมีการกระจายการลงทุนไปยังหลากหลายอุตสาหกรรมที่เกี่ยวข้องอย่าลืมนะคะกองทุน B-Care จาก BBLAM มีการลงทุนใน Wellington Global Healthcare ค่ะ